Nvidia is poised to print really low prices from current levels. We're now approaching extreme downward levels as things stand right now. Yesterday, the 19th of April, they lost 10%. And we know for sure that it is, as you can see clearly here, it is trading at a huge discount. It's a 10-day moving average, and equally it's a 21-day moving average. The forecast is that right around here between 637.98 and 580 dollars, that will be that will be where we are going to see a bottom. So we're not there yet. This bottom might turn out we might get to this bottom around sometime in May. Even if we get there before May, but May will be the time where it's expected that a pivot might arise. Okay, it also turns out that there's also a support it had on its 10-day moving average at some point. If we have a look here, or this is its daily chart in January, as of January 31st, there was a demand that was made. A demand, what I say now, a demand ensued for the stock that saw it spike all the way towards 697. So that's also how that demand print also happens to be right around where this bottom we're talking about is. Is within that range, within this range of $637, which is also a Fibonacci projection, and all the way down to $580. $580 will be also somewhere around here. 597. It had some. It was on a previously as of February. I want to believe. No, previously as of January 20. Okay, between February 19. Sorry, January 19 and January 23rd. There was a lull in the stock. So yeah, this is what's going on right now. Even though there's on its weekly chart more extreme prices, more extreme downward prices are projected as well, 400 and 451, but it's not likely that it will turn out to be the case. Somewhere around here, 451 will be somewhere around here. You can see that 451. Interestingly enough, on this weekly chart, the 10-day moving average, the 10-week moving average is all just projecting lower prices by it's currently at right now it's somewhere around 800 and 690 or thereabout. Is it? It's currently, let's get the price for, let's get a value for it. Okay, it's currently at 846. So it's projected that it will begin to decline by next week, Monday. This coming Monday, it's going to be 829. It may be 829 by the following Monday the 29th of April, 791. And this decline is expected to continue all the way down to, let's get where we are, all the way down to the 30th of June, which is around 408.11 dollars. Okay, so this is all these are just forecasts. There's no guarantee that they will turn out to be true, but for sure, the upward trend is coming to an end in the very short term. But it's expected that a pivot will arise or will occur in June, between May and June, and that's when more forecast is expected that money might begin to flow back into the stock. But as things stand right now, we are seeing what looks like a distribution. Not just even a clear case of money just completely going out, and okay, you might say distribution, money going out, older holders giving way to newer holders, but the older holders are leaving the market with aggression, and it is driving things down. But interestingly enough, the projection on its 10-day moving average is projecting that in the very short term the price is going to keep spiking, regardless of the downward pressure that has ensued. We have projections here all the way towards 887 for its 10-day moving average. So maybe with this 10% decline, we might see a slight slightly rebound that will probably ensure that this 10-day moving average and indeed a 21-day moving average on its daily chart don't continue to decline. So this might be right, but it does not mean that the intermediate trend is not wrong. We're likely to continue to retrace all the way down to, like I pointed out, all the way down to 633, down to even $580. Yeah. So have a look and see if this is an opportunity for you to do something with Nvidia. This weakness that is setting in, that is going to go all the way towards May, and I'll definitely continue to update you. Statistically, things look a rebound is definitely on the cards. We can just quickly have a look and see 762.89. Its current price 762. We can just get an idea of the sort of probabilities we're talking about here. 762.89, and looking at its 10-day moving average, we have 85665, 856.65, and standard deviation is 36.25. That's 6.25. And then we do the calculation. We know very well it's going to be a very high probability. Okay, so the probability that it will remain below, the price will remain below $762.89 is, look at that, 0.48%, not even up to 1%. That's just a validation that something really drastic happened here, something really aggressive happened here. This 10% plunge. This is, let's see, this was Thursday the 18th. You can see that it was at 846. Yeah, so this is huge. Yes, a huge day of volatility. Definitely will definitely result in probabilities like this. So for sure, there's a good chance that even if things don't look good come the next trading session, which will be the 22nd, in the broad market, there's a good chance Nvidia will try to look up. This is just to satisfy this probability. It's highly likely, and market participants are watching it. Their algos are equally watching it. There's a trade opportunity is there. Has turned out, turned out, has now in place, given this retracement, this 10% retracement. So the buyers are definitely going to take advantage of it in the very short term. So the probability that it will go above that rebound, 99.515%. The probability that it will stay between it will maintain this sort of range, 762.89 and 856.65, is 49.515%. Yeah. Okay, we can try and see if what we can determine this sort of probabilities we're talking about here in relation to this $640.25 projection, downward projection. Okay, it is a forecast. It is a price, so we can relate that with. We don't have any moving average we can relate it with. Maybe we can go to its weekly chart. We might find a moving average there. So this is we don't have any date. Okay, so we have 640.25. The reason I'm trying to do this is that if we use moving averages that are too way off, it's going to give us unrealistic probabilities. Let's see now, 640.25. Okay, what can we relate it with? And if we use this, then we have, can we still use the moving average, the standard deviation of 856? Let's see now. We can't rely on that. We should try and see whether we can even, let's look at the weekly chart. We might pick up might be able to pick up a moving average there that we can relate this to, 649. So okay, we can use we can reference the date right around where this 640 points to back in time. So it goes all the way back to sometime in crosses sometime early February. So we can refer back to that and see, we can refer back to the weekly chart and see whether we have any moving average that will cross, any moving average that goes towards that sort of, those all the way back to that time, early February. Okay, this is January. Okay, so February, this is January. Early February. Okay, so this is the sort of level we're talking about here, somewhere around here. So our best bet might just be $689, $691.59, 691.51, 691.59. We'll use that as a moving average, and then a standard deviation. We're going to use the standard deviation on its weekly chart. I think that is still the daily chart is still, that moving average is still very much valid. Okay, so we have this downward projection of 640.25, 640.25, yeah. And then we have standard deviation of let's see, of 36.25. So let's get back there and input the values. It definitely is going, because the price the forecast is, the projected price is definitely at a discount to the moving average, then we're definitely going to have a higher probability of a rebound. So, but it does not mean that it's going to come out pretty soon. So the essence of all of these is to see if you can, buy the opportunity, buy this dip, or if you're already there already, take your money out and buy it when it has decayed further, when that opportunity has yielded more upside opportunity. So we have the probability that it will remain below 640.25 is 0.0783, which is 7.83%. Probability that it will rebound when it gets to that sort of level is 92.165%. The probability that it will trade between 640 and 691 is 42.165%. So it's just as simple as that. As far as the price is trading at a discount, it's a moving average. The moving average you are referencing, or you are applying, or you're doing your analysis with, then you're definitely going to get a probability that a rebound will definitely be on the cards. So on the daily chart, I think in the very short term we are definitely going to see a rebound for sure, with this 10% drop. But in the long term, the retracement might continue to ensue, and then the more it ensues, the more the buying up the upside opportunity will be. So If you're not there already, is this going to be an opportunity for you to get in there? We are there already. We have a position there. We're thinking of taking our money out and getting back some other time. But in the short term, it does not mean that it wouldn't be spiking. It will be spiking, but it will be towards the it will be with a bias to the downside. Yeah. So just have a look and see what you make of Nvidia stock, and it's quite a challenging time, and I'll definitely continue to update you. Thank you very much for watching this video.